So now we're going to go over how to find stocks to trade. So the interesting thing that you've got to keep in mind about that is that there's a scenario that you're after in each situation for what stocks you want to trade. So, for example, what we're looking at here, it could have been any stock really, but this is my own proprietary thing that I've built here in order to do fundamental analysis, long-term fundamental analysis on stocks in like 3 seconds. Like the stuff that takes analysts like um, 30 minutes of hardcore math and maybe even an hour or 2 hours to analyze a particular stock. I've put it together where I see all the most important metrics in the fundamentals of a company visually. So I can see, for example, let's go over to Apple's chart. I can see that Apple has been amassing debt ever since Steve Jobs died, like to the month. And Steve Jobs was against debt. He wanted to be all cash company. And until the day he died, they were an all cash company and never had any debt. Since the day he died, you can actually start to see that Apple started to accumulate debt. This is this red growing amount of information under here, quarter by quarter by quarter by quarter over the last, whatever that was, 7 years. It's almost to the day that Steve Jobs died that they just instantly started pulling out debt, and now they are at 36% debt to asset ratio, which is it's probably right about right, but it's not right going into an inflationary period. It's very bad, as a matter of fact, and going into inflation, and that's why Apple's not doing good. But my point here is this: uh, when you're finding stocks to trade, it depends on what you want to do, like what you're trying to accomplish. You have to know that first, and then you have to work back and go, oh, okay. So then this situation needs to be as such, and then you screen for it, and then you filter it down. And so it requires you to already have preset strategies, really. So almost even before what stocks to trade, you have to have learned what are winning strategies. Winning strategies are like, the backbone of how anyone can make money in the stock market. Because think of it, buy low, sell high. Is that a strategy? Yeah, that's just as simple as it is. That's a strategy. You have to at least, don't you think you have to at least know something like that? You have to have a strategy before you start. So, really, we have to have a strategy in mind before we filter for stocks that will match that strategy. Now, we trade in the morning a bunch of momentum breakout stocks, and there's a way that we can find those stocks, and I can show you that very easily. In fact, I think that many of you probably even know how to find those. And I'm happy to do that. And then, as far as like screening for stocks to invest in, what I do is I have certain filters that I use, and then I pull up a page like this and I check the fundamentals. Are they in improving shape? Are they just like always doing outstanding? Nice. Then that's something I want. Like let's take a look at Microsoft. Look at Microsoft. They're decreasing their debt ever since 2017. They've been decreasing their debt. That was a good, smart move on their part, and they're down to about 26% debt to asset ratio. Also, what you'll notice, this purple line here, that is I think actually that's the Grams number, but it's similar to the book value. But what's most important to notice about it is it's increasing incrementally every time. So these are things that I like to see in a stock is improving metrics consistently. I don't want to see a big jumps everywhere. Can somebody give me a shit stock? Give me a really bad stock. Basically any stock you're in right now. Yeah, GME is probably a good one. Look at that, the amount of debt that they've been in recently. I can really understand it. Let's go with another one. That one, like, all right, that's actually could be a good one to check out. Redfin. Redfin hasn't been around for a long while, but you know, it's not too consistent. It's not too consistent. And that's something that I see there. Airlines. Oh yeah, airlines are always good. JetBlue. See this green line right here, always increasing? That's their book value, $4.64, $5.30, $5.63, 623, 671, 722, 8 whatever, 9, 11, 14, 15, 17. They never have an inconsistency. And if you see here, it starts to break down by quarter, and all those stair steps are even. When a company is doing that, I love it. This is not something I'm trying to teach you right now. This is my own like proprietary system that I've constructed here with TradingView that I'm not sharing, so don't even ask. But I'm happy to do a quick analysis of certain companies for you privately or whatever you need me to do. But the point is here that that it depends on what we're trying to do with our trade. What is our target? And that brings up another thing I want to tell you is that most pro traders only trade the first 30 minutes to hour and a half of the day. That's it. I mean, you might have this like what is it, romanticized notion that a pro trader sits here like me, like this, like all set up, trading the markets all day and maybe even all night and every day. And there's certain scenarios where that makes sense though. But for the most part, no. Most pro traders just trade the first 30 minutes to an hour and a half of the day, and they're just looking for that first move. Because if you have ever seen, let's see if I can, the biggest moves occur at the beginning of the day. This is probably not the best stock, but does anybody know anything that was a big cap that went up today? And it doesn't even have to be a lot, but some would be nice. No, not one of those. Not a big momentum trade. Just a big cap. It went up, and it had a good day, and it wasn't an amazing thing. I think Amazon had a super big day. No, let me try Dash probably then. That's not the kind of thing I'm looking for, but yeah, okay, no, look, this is actually it, right? Look at this. So when you see this chart, maybe the first thing you think is, man, that went up all day and it ended at the top, right? But really, upon finer analysis, what you have here is, man, that went up 85% of the entire day's move in an hour, in the first hour. That's what you really have there. And then from there, it went up a little bit more on the day. The biggest move of the day was right here, beginning of the day. That's where you make your money. And so for day trading, when we're trying to find stocks to trade, we do look for stocks that are going to, pop on the day, but we don't really expect much other than them to move for about 30 minutes to an hour and a half. This one would have been over for us. We could have got out on the 8 MA right here, the 8 MA break, on the 20 MA break, on it didn't break this pivot on the pivot trading. We would have been able to stay in all day, so that would have been nice. But overall, you know, risk wise, like you guys understand the term opportunity cost. Opportunity cost. You were much better off spending, the hour that it was here, getting 85% of the move, than spending 6.5 hours getting 100% of the move. Because you would have had to spend, you just then spent 5.5 hours getting just another 15% out of it. 5.5 hours. So all of a sudden, your hourly rate went down. You could have been on the beach drinking margaritas, is the typical dream. for the rest of the day. And in fact, if you become a good trader and you can trade the first 30 minutes to an hour of the day well, and you can get that down, you can lick that, you could easily live in a beautiful paradisical beach, out of the United States, for $2,000 a month in most places around the whole world with amazing beaches. You can live like a king. Like I had an income that was a little bit more than that, but I didn't need any more than that. A lot more than that, but I didn't need any more than that when I lived in the Caribbean on an island, and I was there for I think 2 years before I moved to Cancun. But I lived on an island in the Caribbean, and for like $1,000 a month, I think it was, yeah, $1,000 a month, I had a multi-bedroom, two-story home at the top of a mountain with a 360-degree view of the entire Caribbean. And with cruise ships, I could see them out in the horizon, see the sunrise over here, sunset over there, with a hammock on the porch, and multiple bedrooms, and a long driveway that you drove all the way up, drove all the way up. So anyway, it's very easy for you to, that whole thing. I don't know what that is. There's probably a, they call that dream something out there, but you quit your day job and you maybe travel the world with your laptop. Believe me, it's very doable. And if you stick to the 1% rule, by the way, it's very doable. My God, you could do it with $5,000 of savings. With $5,000, you could quit your job now, go downsize. You'd have to, downsize and put yourself on like a $2,000 a month budget to live around the world. And with $5,000 a month, you should be able to do that. Like for instance, Sarah said she made 60% in 2 months so far using the 1% rule. 60% in 2 months. So it's compounding, but probably you could say that's 30% a month. So I guess $5,000 would get you $1,500 a month, you know. But so okay, you'd be better off with 7,000, something like that. But see what I mean? It doesn't take much, but of course, I am telling you in that scenario to downgrade your spending lifestyle. You're no longer going to live in like California or like in a metropolis somewhere. Now you're thinking about, Thailand or the Caribbean or Costa Rica, or I don't know. You guys have probably ideas. So what I want to do is focus on how can you guys find stocks. I think, that's the best thing that I could show you is how can you find stocks that are going to pop today, like we did all day, right? All we did was just like we were on the ball. I mean, I'm going to say that 30%, 15% of that is that we're in a community group and we share and we're like a hive, right? And you guys sometimes say, "Oh, you got to check out whatever," right? And we check it out. Yeah, sure enough, it's pretty awesome. But there are ways to scam for those. So anyway, so some of you have probably even seen me show you some of this stuff, but like I probably think the easiest way you could do this is you go to Market Chameleon. It's the easiest way. Uh, I might show you guys how to Market Mastery came up. How to even program Thinkorswim to do this. Okay, so that's gonna be cool. I'll show you that too. But I want to make sure that everybody also sees this. This is really bright on my screen. Hold on. Okay, there we go. So you go to Market Chameleon, and it looks like this. I don't know why, but so anyway, we go to Market Chameleon to find stocks to trade. That's right, man. And then in there you have some different pages you can go to. You go to stocks, and when you point at it, it brings up a lot of different things you can see for stocks. I guess the green side is for paying people, and the white side is for free. So they have it for free. If that ever changes in the future, we'll switch websites and fuck Market Chameleon. So for now, it's in pre-market trading. Here we go. You go over to pre-market trading. So somebody asked me yesterday, I think it was over a private message, or it might have been it might have been even a private lesson, I forget. But somebody asked me yesterday, so what are we going to get in tomorrow? And, my best answer is you have no idea what's going to be happening tomorrow until tomorrow. And one of the best ways you can make money in the stock market is to go after what's actually happening, not what might be happening. And that's what we do. That's my style of trading is we go after only things that are confirmed happening. And even when we get in, we only get in when they're confirmed killing it, and we have methods to profit from that, right? Other people will get in when nothing's happening. And I don't know, some people even will, they'll wait weeks. Oh, don't worry, it's going to spike. In the meantime, you've lost 50% of your money on some penny stock that keeps going down. And then don't worry, it's going to spike. And it's down like now 80%. And guess what? It spikes 300%. But because you've lost 80%, you're actually still down 20%. Anyway, go after what's actually doing something. And that's what this is going to do. So you go over to Market Chameleon, go over to stocks, go over to pre-market trading. And this can work in after hours too. Like before we're done here, we could go into the after hours. I'll just do it right now. We go to the after hours. We can see, wow, what is up big in after hours? I can see AMST, MMB, Ray, PGen. I don't see any of them because they reported earnings, but this one has news. Precigen ActBio announces positive top-line results from a phase study. Okay, PGen is up 31%. So tomorrow, what we would do is we would check if PGen is up even more. If PGen is still jumping tomorrow morning, then we'll trade it. But let me ask you this. Do we need to actually look at those tonight? See if tomorrow they're jumping? Or can we just look tomorrow morning and see what's jumping? Like, aren't we wasting our time by looking tonight at what might be jumping tomorrow? Theoretically, yes. Although it can help to know, maybe you could do a quick scan every night like this, and you go, okay, I see. And then tomorrow morning, you can have that just knowledge, I guess, that, oh, that thing, man, it was up way yesterday and now it's up way today. The only thing is when we look at the stocks in the morning on the chart, you can see that. So you don't need to waste your time. All you got to do is check what's hot in the morning. Unless you're one of these guys in a different time zone, you could check tonight towards the end of the day what was way up because you're going to wake up at 4 a.m. Eastern time to trade the pre-market. That's a specialty. I don't do that. I think Tracked Off in the group may do that. So, or you maybe in Asia or wherever you are around the world right now, you may want to start to try to think about doing that. But that's not what I'm going to show here now because the majority of you are going to be trading the normal daylight stock market hours. So we go to stocks, pre-market trading. That's going to give you 3 rows of information. The first one is most active, and that's really important. It says here, for instance, this morning, OCGN was super active, trading 28 million shares. That means that's the number 1 stock in the morning. Everybody's on that. And the number 2 stock in popularity, this is like popularity, is Clove. So you have to think, oh, Clove. We saw that pop majorly yesterday. That's super popular. And you look at it and it says it's up 7%. And guess what? 7% isn't that much for stocks. We start pretty much filtering these around 20 to 50%. You want these stocks to have gone 20 to 50% up. Ideally, we want 50% or more. Okay, and I'm going to talk about that in a second, but we're not really going over the percent change yet. I'm going to do that in a second. But so the first thing to notice, though, when you see like, wow, OCGN's up trading 28 million volume, it's the number 1 most traded stock this morning. That's important to know. But then look left or wherever you have to look, and it says percent change. It's down 26%. So that's not going to be a bullish trade that you can take on. You're going to have to short shares in order to trade that, or get puts, which means you can only trade during market hours. Okay. So that's a different strategy. And I don't recommend you guys start to think about doing down trades until you've mastered up directional trades. Okay. It's great when you enter the world of options. You're like, oh man, I can finally make money on the stuff going down. That's why I'm always losing money, because I buy calls when I should be buying puts. It doesn't quite work that way. And you're going to find that out really soon. You get your first put and you're like, it's going up. That's not going to happen. So really, I want you to master going up first. So OCGN, yeah, well, I'm helping guide that one. OCGN is down. That's not really going to like qualify. You want to know what is the hottest, most popular, most up stock. And at the top of the list here with 7 million, up 20% roughly, is Eni. Now, funny, that was this morning. This is the list from this morning. Eni. Kind of funny how that worked out, right? Didn't Eni, like, I don't know, run all day? Let me see. Fuck. I mean, Eni provided. So that's what happens. Is the next thing you do is you want to pull up the chart, okay, for the one that you just pulled up that you were scanning for, and it's going to look like that. Okay, you can see that gray area, and if you don't see a gray area or a extended hours area, you want to turn that on in your charting software. Go into the settings, whatever it is. You want to make sure you're seeing the extended hours trading area, because what you're looking at here, and I'm going to put it in a box or something, is this area here. Come on, yep, is yesterday's evening after the market closed, and then all this, and then actually in the evening, right towards the end of the evening, it started to really go up, and then that was it, and it had to get cut off. If you see something like that when you're doing your after hours scanning and you want to wake up at 4 a.m., something that went like and ripped right at the end of the after hours, if you can find those, probably if you can either get in right at the end there, or the next morning when you wake up, if you can just grab some, if it breaks out of that high, probably it's going to rip like this, like it did. For those of you who want to wake up at 4 in the morning Eastern time. Yeah. So, but doesn't matter. What I'm trying to show you here is that this is now the pre-market. This is the morning session from 4 in the morning until the market opens. And that's what you're going to be looking at, is that information, and this information being yesterday. And you can put them together. Some stocks will be up 2 days. I mean, both sessions in a row. They'll be hot yesterday and continue their hotness this morning. And you can look at the chart. Now, I can tell you, maybe while we're on it, some tips about how to make sure that that particular stock is looking hot, or if it's not. Okay. And what you want to see is continued bullishness, but you have to kind of discount the low volume hours of the day of the pre-market. So this is a little side note for those of you wanting to get even deeper into the surgery of all this. Pulled this up. This isn't how to find stocks to trade. This is now how to find out if the stock that you found of the stocks to trade is good or medium or blah, right? So this one, by the sheer fact that it's not just fading smoothly, makes it better than most. Okay. Also, that it had this huge increase shows its potential. Okay. If it can break that level up there, somewhere around where the action was really trading, here, which was 2.9. And then for me, I said, let's make that 3, since it did get up there. I want to keep you guys safe. So get in at 3.01 was how we figured that out. The breakout of the pre-market high is a momentum strategy. If the stock can push with enough bullishness to break out the pre-market high, that's one entry point, which is very bullish. But however, pre-market here, we're seeing lower and lower highs. So that's what makes it not super great. And it's falling below VWAP too. This VWAP line is this dotted cyan blue line. Later, Julie. This dotted cyan blue line. It's kind of like trending below VWAP, right? But what I notice about it is that it's not doing that too hardcore. It's kind of soft, not breaking down and dropping and causing massive amounts of hysteria. It's like the way you can see that. I can see that. I guess I just didn't say how you can see that. Is that the peaks and the bottoms are overlapping the previous legs a lot, not even by 50%, by a lot more. Okay, like that, you see. So that's very similar to a pullback, the type of trading that a pullback puts in. And a pullback, as you know, that goes downward in shape like that means we're still in an uptrend, you see. So because then it goes like this, right? And that means we had that little pullback, which you might call a flag, whatever you want to call it. And that's what I was seeing here, was that it was not that dramatic downtrend. It was behaving like a pullback. That's an example of one, and how I would read that. I would say to myself, the stock's, pretty decent. So we kept it up on the radar. Now, so INI, that was over here, and it had 7 million volume. So that's like highly qualifying. So I look at these, for you guys every morning. Wish was only up 4%. So Wish wasn't happening, because look, if Wish was up 4% and that was the highest percent any stock on the entire stock market was up, okay, Wish is happening, right? But for Wish to be up 4% when we can go to INI for 19% with more volume, Modally, whatever that is, up 95%, Meds up 54%, 20%. You see what I'm saying? Wish is buried, man. It's buried. It may put a little tease in at the open, like do a little belly dance for you, but then it's probably going to fade away. It's not happening that day. I don't know if I'm right on that on Wish. Let's go check. Yeah, in fact, Wish was just a total flop today. And what you'll see, what I see, because I've been doing this so long with you guys, is I see a bunch of meme tards, you know who you are, who loved this and are like, dude, are you in Wish? Like today, this morning, they'll be like, Wish, dude, Wish. And they're telling Wish, they tell all their friends, Wish, man, Wish. And what they don't realize is that was 2 motherfucking days ago. The fuck, man? Like, you can't get these people to calm the fuck down about shit that's yesterday's news. I'm gonna call you meme tards. Calm the fuck down. You guys, slow down and realize that once something's done something amazing, it's done. You missed it. All right. We get those because we watch we see these things start to bubble to the surface because we see it those initial first days because we're scanning for these every day. We start at the 20% jump level and we start to recognize things too that are up 9%, 11%. We don't exactly necessarily maybe trade them, but maybe we put them on a corner chart because maybe that's going to turn into a 25% runner today, and then tomorrow it's going to be up 100%, right? So, that's the way to be. Yeah, like Clove, totally. Yeah. Yeah. It's you want to be ahead of the game. So this morning I could have told you wish is nothing. And I think people, they say you're going to see me say it, you're going to hear me say it tomorrow morning. It's going to happen again because there's only 54 of you in here right now, but we have far more members who come in here for the trading, not necessarily for the class. Tomorrow morning you're going to hear me say something maybe just in passing, but you'll hear me say something like somebody will say like, whatever it is, clove. They'll say clove, and you'll hear me. I always say, "Oh yeah, clove's not happening today." Like I just got to get out of it. Like, dude, no. And it means no disrespect, when I say "fuck you" or "you're a meme." I just mean no disrespect, but like we just got it. Business is business, and if I'm gonna make you some money, you're gonna listen to me, not the other way around. You words. I'm gonna make that word stick. So we're not still holding Clove. No, no, no. Is it too late to get in? That's the best one. Oh man. And I can even teach you guys how to recognize pump and dumps, and we'll get that maybe next week. We'll get more into the detail on the graphing and stuff. But listen, we're trying how to find stock to trade. You guys are going to be like, you're doing better. I'm sure you're learning something here, even if it's a bit smack in the face. All right, Modally Clone. There it is. Clone. Clone was down 3%. So I went Clone, Clove, Clean Energy was down 3%. Actually, we're in a clean energy swing trade, I believe. So I hope that continues to go up. Modally or whatever it is up 95%. That one would catch my interest. So then we would go to it, and I don't think it actually performed today because we went after it. I don't remember. I don't think it worked out. Yeah, see, it didn't work out. For me, this is another aspect of how you can view these pre-market charts. This is a good pre-market chart. Uh, Partly though, however, I do worry about this very steep angle there. Okay, when we spread it out, it's not as steep of an angle, but it's still much more steep than the other one. Okay, this rally I like, but again, it didn't break any previous high, so it wasn't actually bullish. It was bearish. It just happened to be the rally, not the pullback, in form. That's okay. It's not making those higher highs, but it's okay. If the stock could have broke this pivot, this is what I'm getting to, this recent pivot, I would have got us like half in, like 0.5 risk. I would have got us half in if it broke that. And then I would have got us probably all in at this point because it's so close to this super high of the day. And that was only for a split second anyway. And there's a lot of other trading in here. This whole level, this was the important level to break for the full all in. And then this pivot, recent pivot point, would have been entry number one. And this would. But guess what? Didn't happen. We didn't even lose a dime. We didn't lose a penny on that trade. Didn't trigger. But you have to have your strategies in place, you see. So we're finding stocks for our to feed our strategy. We're finding stocks to feed our strategy. So that one didn't trigger, and sure enough, it bled out all day. I don't even know what my point was there, but probably learned a little bit. But that sometimes, I think probably my point was you never know what it's going to be. You really don't. And when we try, I don't think we're ever right. And I am so okay with that because it just doesn't matter. I don't mind being wrong so long as I'm right on something else or even wrong on that in a good way. And that we got in when I said it probably wasn't going to go. We got in, we made a ton of money, and that's fine, man. I love being wrong in that scenario, right? Yeah, this is Market Chameleon. Here's the exact link to the pre-market trading page I'm on. So Zevo was up 25%. OSAT was up 29%. The next thing I look at is how much volume. This is nice. This middle column is gainers. See, I switched over. I was talking to you about what's most popular over here on the left, and that's sorted by volume. Okay, volume of trades traded so far. And whatever's getting the most volume, that's the one that's most popular, roughly. And then I move over to the middle chart, gainers, and I'm looking for anything over 20% is pretty good. Anything over 50% is like those are our GME type stocks on the day. They're going to provide like amazing returns. We got more returns out of meds than most people got on GME in the last 2 months. Other than the first GME push, those aftershocks on GME are nothing compared to what we've been getting out of new, fresh stocks. Like that's why it's so important to drop the baggage, the old stuff, and be ready and fresh and new every day. Anyway, the next thing I do is I go to this middle column, which is gainers. We look at it's automatically sorted by percent change to the upside. We look at giant percent changes, looking for bigger than 50%, bigger than 20% will be okay. Under that, it's worth taking a look at, especially if it has some incredible pre-market chart. And then you need to look at the volume next to each one. Like this one, MYO, it was up 17%, which when you compare it to, say, AEI, which was up 14%, is more, and 17% is a lot. It's not quite 20%, but look, it's only traded 20,000 shares. That's nothing. You want more than 200,000 shares, ideally more than 500,000 shares. Depends on how early you're getting to it, though. Of course, if it's 4 in the morning, it may have only traded 4,000 shares. Like you're getting 1,000 shares right then, and you push it up to 5,000 shares. But it's going to start to get more popular throughout the day. And if by an hour before the open, still only at like 20,000 shares, that's a nothing. It's a blip. It's not indicative of anything. And you can even go to the news. You scroll over, and this is cool. What I like about Market Chameleon is I don't have to leave anywhere to check the news on each of these. It shows me the latest, like, several announcements of news. So I can go to like that one that was up 95% and say, what the hell is it? And it says Medley Management stock soars as retail investors tout stock on social media. So I don't know. I know that now that it's like a social hype Reddit pump and dump type thing. Fine. They got murdered today. Funny. And then you can check the news on each of these. Another thing you can do on Market Chameleon, and this is another thing you want to pay attention to, is what is the float. And that's a little bit of another discussion. I'm not going to go deep into that. It'll take us a little too long. But what you're looking for is stocks with a number of shares float that's very low. That's like 5 million shares or less. If it's 15 million shares or 25 million, it's still okay, but it's less attractive than something that really has like very few millions of shares. It could even be 50 million shares. But the thing is, like OCGN, it traded 28 million shares pre-market. If it has 50 million shares float, that's kind of okay, because if it traded 28 million shares pre-market, once the market opens up, there's only another 20 million shares to trade, which it could probably do in just a couple of minutes on the open before it's traded the entire float. And essentially what that means is then everyone has bought all the remaining available shares on the stock. So it's possible then for there to be a supply demand wreak havoc on the supply and demand, because you might have too many people holding all the stocks, but people want in. What happens in the case when there's no shares to buy because everyone has them and they can all work together to hold them as hostage, those shares, and people want in? They're gonna bid a higher price. Come on, give it to me I'll give you $1 more. And the other guy's like, $1 more, this fuck to you, I'm taking it for $2. So they bid it up, and that's why the float is so important. It really low float and high volume, like, wow, that's a fireworks scenario, right? So let's just take a look. This is another cool thing. about Market Chameleon is you can click on the stock without leaving this screen, and it will show you the float on the bottom right. It says shares float 193 million. So see, that is way too many. That means probably they're not even going to be able to move the stock. If you go to BlackBerry, it's the same kind of thing. I think it has a 500 million float. That's why BlackBerry can't move more than like 14 cents at a time. You can barely push it around, even with all the money in the entire world. Same thing with like, these coins on the crypto market that have like a quintillion number of coins. You'd have to have a quintillion market cap, meaning you'd have to invest a quintillion dollars into that coin for it to be worth $1. Billion times a dollar is a quintillion dollars. You need a quintillion dollars to make a quintillion coins worth $1. That's why I go after crypto that's like, more reasonable, not even a trillion coins, maybe a couple billion coins would be more better. So anyway, float is very kind of similar to the crypto number of coins. It's a very similar thing. You can't push up the price if it has too many shares traded. So how about like any today? I didn't even check that. Let's check the float on that. Float was 19 million. Love it. The float was 19 million. That sure is a hell of a lot better than OCGN. The float was 19 million. It was trading 7 million pre-market. And I don't know how many shares it traded during the day. Anybody know? You can look that up somewhere. I think I get a total if I go to this. No, that just tells me the last candle. Anybody know how many shares any traded today? Any shares volume. Because any, it had to be any. Anyway, I'm going to guess that any traded like 50 million today, maybe even 50 million shares. And it has a 19 million float. That means like 3 times you could sell your money to the demand, to other people bidding up the stock, and then get back in, and there'll still be enough demand to push it up again, and then you can sell it to people at the top, and there'll still be enough of demand to push it up again. You see what I mean? So that's part of this whole supply demand, why these stocks go up like mad dog, is when they have a low float. And you can scan for those. Like you can set that up. Amazingly, Thinkorswim does not give you access to the data of what is the shares flow. But you can go on TradingView, like somebody said, Webull, any scanner of your choice, FinViz, and you can put in a parameter. Hey, what's hot today? What's up 20%, right? What's up 20%? What has a shares float under 10 million? It's over $5, the stock. And it's trading more than 500,000 shares pre-market. You can start to put it all together. You hit the scan button, and boom, it gives you like 7 stocks. I canceled my FinViz premium account recently, so I can't really show you it doing the pre-market scan that way. But look, I'll just show you how you do that over in FinViz. What? The lower the float, the better. Yeah. So you just go to screener over on FinViz, in case you don't know what that is. It's I don't know. In case you don't know what that is, and I was just gonna leave you fucking hanging there. In case you don't know what that is, moving on. I'll keep you in the dark. All right, so here's where you can put all kinds of information. Here it is. Look, the percentage of the float short, that can be useful as well. But somewhere here we go. Float. Look at that. Right there, you guys. Boom. Under 10 million. So now instead of 8,127 stocks, we're talking about 800 stocks. Let's keep filtering it down, right? And then you want to know it has a price above $5, something like that, maybe $4. That other one we traded this morning was 3. Let's say $3. Look at that. We're down to 53 stocks, okay? 3 pages. And what was the other thing? The volume traded so far today. Unfortunately, you have to have the premium version of this. to choose pre-market volume. You can do it though, but only if you have the premium version of FinViz. So, but I'll just say current volume because it'll then filter some, so you can just see it, limit it down, I guess, is over 5 million. You know, that's hot. Now 53 becomes 3. Let me actually make that a little bit less because no. Oh, I said under. Wait a minute. Under 10. Over 5 million. Over 2 million. Let's get a few more. All right, we got. Yeah, that's an after hours. AMST, MDDR, PTI. These aren't. Oh, Zin. That came up on our list. So what made it not? Oh, this guys. This was. Did you guys want to tell me the problem that I did here? I put price under $3. It should be over $3, $3 or more. Here we go. We got 22 stickers. Now I can probably go current volume over 5 million. Now we're down to 8 stocks. And guess what they are? Meds, NCTY, INI, GoED, AEY, MDLY, OSAT, YRD. I mean, basically, those are the ones we traded today. Another thing you can do, which is cool on here, is then you can click charts and you can like look at their long-term charts. And if you have the premium version, I think you can see the intraday. I'm going to click intraday, but I think it's going to take me to, you have to subscribe for that. Yeah, see, there we go. So that's $25 a month if you get the yearly subscription. It's more than that a month. That's kind of a bummer, but still, anyway, there's many different softwares. You can probably do it in your Webull. You can do it in your Thinkorswim. Let me get some water. And you can scan for what you want, the parameters for what you want to find those things. I just happen to like this format. I like that it shows me the news. I like it shows me most active gainers and decliners. It shows me the volume, the percent changes, and then if I click on them, I can, in most cases, see the float. This one, see, didn't show it. Most of the time, I can see the float. 80% of the time, I can see the float. I can get a lot of information very quick from the free version of Market Chameleon. Not that I don't want to pay for it, but you know, it's got to have the things, certain things that I need. And anyway, this is all I need, and it's free. One other thing I do in the morning, you'll see me doing it, is I'll go to these gainers. I'll go to the gainer list, and I'll click show me all those huge gainers, but by market cap descending. So that way I can see, because can you imagine if Boeing was up 62%? Does anybody know? I mean, maybe not all of you realize, but some of you probably could laugh at that right now with me. That would be absurd. Some of you probably know that. Like, there you go. Ryan understands. Can you imagine Boeing up 64%? If I'm going down a list sorted by market cap of top percent gainers on the day, and I see a $186 billion company. Look at this. A $165 billion company up 11%. Edu, right? I think we watched it on the day. That's pretty significant. I want to know what's the news. So I go to the news and it doesn't actually have any news. So I don't know what's going on. But for some reason, a $165 billion company is up a lot. You know, for those big, that much money, that's a lot. Edu was up pre-market a lot. It didn't end up following through. But look, it was like, right? It really went up a lot. It was closed at 9 the previous day, and it was hitting 10 by the next day. So maybe in day trading land, that's not too significant, but for a $165 billion company, deal. So I go down the list, and that's what I do. I look for anything kind of substantial, like this 4.6%. I go, that's kind of interesting. It's not a ton like we looked at before, like 50%. But for a $96 billion company, being up 4.6% on the day is interesting. It piques my attention, and I can see it's up 21 points from 486. The stock is now. I suddenly go like, oh wow, I know now. And then I go over to the news. ServiceNow added to Goldman conviction list on its near-term fundamentals. So it was a kind of an upgrade. And sometimes you'll see something like that. It was added to the mid-cap S&P 500 or whatever, and that's why something might be up. So then I can go over and I can look at it. What was it again? Now, ServiceNow, and I can look at the pre-market chart and see that it closed at 465 the other day, and in after hours it went up huge all the way up to 485. That gets my attention. I would have gotten us in there with a stop at 476, so about $10 of risk. We would have therefore stayed in the trade. The new stop would have been 480 right there at that point. We would have still been staying in the trade. I'm going to get to the take profit parts in a minute here. And then, yeah, float's too high, but it's not quite the same situation. This is a $1 billion, like multi-upgraded hedge fund and institutionally traded stock. So it gets the volume that it needs. Not fucking hedge funds and institutions are not going after, what did we trade today? Any, or these little companies. They're not interested in those. They have to follow the SEC guidelines. They have to be accountable for the stocks that they trade to their clients. Those clients are accredited investors with 5 million minimum accounts, and so they can't go trading what meds, or I don't know, some of these like really like shitty stocks that we trade in the morning that are like really going to give us a big return. So it's not that big of a deal that the float is too high on ServiceNow. That doesn't even factor. These guys are throwing billions. They're just like, oh yeah, give me a huge allocation of that. So anyway, we get that trade, and we would have still been in all the way to the end of the market, as a matter of fact. So it wouldn't have provided much return though. We would have got in at 485, and we would have got closed it out at the end of the day at 490. And probably because it was a huge, expensive big cap, we would have got options, and we would have made the moot points, not super important, but we probably would have made like, I don't know, 15% on the trade. Wasn't a big trade. Anyway, it did go up, and it was an amazing opportunity. It could have really done something, but it didn't. But this is how you find them. And so then we're left with, the way I have it here, I have 1, 2, 3, 4, 5, 6, 7, 8. I have 16 stocks in a row there, and usually that's more than enough. We're monitoring things that don't do anything, but you never know. But lately, the market has been really heating up, and I think we need more space. So what I do is on my other monitor, I have 4 slots for high frequency trading, and I'm starting to put some different ones there instead of the same ones that I have down there. That way I'm monitoring 20 for you. Then on my other screen, I'm monitoring 32 other uh, financial indicators like oil and the market and the Qs and Dow Jones and industrials and real estate and crypto and all these other markets. So that helps me, and I'm seeing that over there too. I'm definitely monitoring more than 16 stocks. For me, that's not impressive. I usually, when I hadn't been guiding a trading group, when I was trading for just myself, I would have 250 stocks charts like this up on multiple screens total. So I think I had 128 per screen on multiple screens. It was like three or 400 stocks up at the same time. And why? It's not to impress you, because in that situation, I didn't need to impress anybody because I was not showing that to anybody. And in this situation, I'm only showing you 16 and I'm not impressed. So clearly it's not to impress you again. Why? Why do I like to watch a lot of these charts simultaneously? It's so that you can be on the ball, and so that you can see what's popping, and so you can go right away, hey, actually those things that we're staring at aren't working out. This one way in the corner, this one's it. And then we jump up over to that one. I kind of like that. I recommend that for you guys. But there's another way that a lot of people do it is they create a filtered watch list based on the parameters, just like I just did in FinViz. You can do that in like Webull or Thinkorswim, and it creates a little like list that's ever changing and constantly updating, and always showing you matches for your scan every second. It keeps changing, and it's like a list. I don't that to you right. Okay, let me see if I can. Here we go. There we go. It'll look like this. This is a pretty complicated algorithm that I programmed to just give me what stocks are bleeding out very smoothly on the day. Like very smoothly is the part that was the complicated part. So we have RevG, Adder, Mile, Hawaiian Airlines, unfortunately, was one of the top ones. So you can create a watch list like that and look at it that way. Like if you don't have the computing power to show, multiple setup, you can use a watch list like that and go, okay, and then you pull up each one and you see what's happening. But that's not going to exactly get you in right when something starts cracking. So yeah. And they do what again? Hmm? What? Where do you see the tickers float? Oh, okay. I got you. You talking about on Market Chameleon? Just click the symbol and then it comes up down below right there. 584 million float. If I go to Schwab, obviously 1.7 billion float. Those are really big because those are by market cap. I go back to by percent change here, and then we go to Modely, whatever that is, and it's up 95%. It's an $11 stock with a market cap of only $45 million. It's obviously small. So you click it, and then it shows the float 3 million, 3 million float. That one really should have moved today, but it just didn't work that way. Everybody wanted to sell. I think that was the one that went down. You guys see it? You just click the stock name, the ticker, pulls up the float. 3.3 million float on Zevo.